Joining me now is Fundstrat Global Advisors Managing Director and Global Head of Technical Strategy, Mark Newton. Mark, it's always great to see you. Thank you so much for being here. We're waiting on this economic data, so I will get the data when it's time, when it hits the tape. But give us your thoughts on this market. You said after that big sell-off, even though we had good NVIDIA numbers, you wrote to clients, you said, I am not betting on this decline extending too much longer before a reversal, and that likely happens next week. You were spot on. Here we are, right ahead of Thanksgiving with another gain. Congrats on that call. Where do you see this market going into year-end and into 26, Mark?
Yeah, thanks, and good morning, and happy Thanksgiving, Maria. Look, the market's been very choppy. The S&P's been literally unchanged for the last month. There remains some bifurcation within technology. To your point earlier, we've seen very good gains out of Alphabet, stocks like Apple that are breaking out to new highs. That's over 10% of the S&P, so it is very important. Tough for the market to go down if you have these two key stocks moving higher, but yet you do have NVIDIA now selling off to the lowest level since late September. So it's important to differentiate, between different parts of technology. I don't see NVIDIA slipping too much more. Their cash flow is going to be, about $90 billion. So that's going to be an increase of about 50% versus the free cash flow, of companies like Alphabet are actually projected a decline this year. So I think this is a temporary, alignment where, NVIDIA has been weak, but I still think that it likely is going to have a pretty sharp rally between now and the middle part of January.
And you told clients that you still feel like the final 6 weeks of 2025 have the potential to show a rally, and that 2026 would be the more likely time for a lengthier decline. What are you expecting?
Yeah, that's correct. Look, I don't think we're necessarily out of the woods just yet with regards to the market. The market certainly is comforted when the chances of a rate cut continue to increase. And we've heard now that Hassett, being the front runner, we've seen that the chances of a rate cut now go up to over 80%. So the market likes that. The market hates uncertainty, particularly with regards to the Fed. The closer we can get to a rate cut being priced in, the more the market will find comfort with that and rally. The problem is really this differentiation between the broader market and technology. We've seen financials, groups like discretionary industrials have really gone nowhere since July, whereas tech has rallied sharply. Now tech's correcting, and the other parts of the market still really aren't participating. We have gotten some good news in the last few days with regards to parts of transportation. The airlines are finally starting to move. We're seeing great movement out of the airlines and the home builders. Very good sign there. So I actually am optimistic that parts of discretionary and industrials are moving. I really want to see the financials move. That's the second largest part of the S&P, and so that's really going to be critical, I think, for the S&P. For those that are banking on an immediate rally to new highs, I think that likely is going to be postponed until after the Fed meeting. There's still a lot of uncertainty, a lot of divisiveness within the Fed. We need to see that rate cut, and I think the market likely rallies after that. The back half of December likely can be better than the first part of December.
Yeah, it's a great point. Let's get to the economic data. It is hitting right now, and markets are strengthening. Right to Cheryl Casoni with the durable goods and jobless claims data. Cheryl.
Good morning again, Maria. So here are the data points that we want to get to. Jobs really important here. Initial claims 216,000. Estimate was for initial claims coming in at 225. So that's actually better than expected. Fewer claims being filed, and this is last week. This is fresh data that we're getting for the markets. Continuing claims 1.96 million, just under estimates of 1.969 million. Durable goods for September, yes, a little delayed here because of the shutdown, but they were actually better than expected. Durable goods orders for the month of September, a jump of 0.5% month over month. The estimate was just 0.3%. Strip out the transports, even better, 0.6% versus the estimate of 0.2%. And then core cap goods, really strong number, 0.9%, almost 1% there. Estimate was only for 0.2% jump. So again, fresh data on jobs. We know that that's something that the Fed's going to be looking at, Maria.
All right, Cheryl, thanks very much. Market stable after these numbers. Mark, your reaction to what we're getting. And I recognize that we're looking at September data, and here we are in November. Right. But yields this morning are trading right around 4% on the 10-year. Your thoughts?
Well, my thinking is we need to get yields and the dollar both moving lower, and that's going to come, I think, from starting to cut QT. We need to add more liquidity. If the data comes out stronger, my view is that's actually a short-term negative because the Fed is not acting on a whole lot of data. They actually need to see weakness to increase the chances of a cut. So durable goods, and also cap goods data coming in much stronger. My thinking is yields likely can start to bounce from here, at least in the short run. So we might have a temporary period of choppiness here. NVIDIA being down pre-market also not helpful. But, the bottom line is we need to wait until after the FOMC, and we need to start to add more liquidity.
Yeah.
We need to get a rate cut. Those things can be helpful for the market going into year end.
Mark, I know you're a technician largely, but does it matter to you that Kevin Hassett is the front runner now for the chairman of the Fed job? I asked him about it on Sunday when I spoke with him. Here is Kevin Hassett with me Sunday. Watch this. Oh, all right. I asked him about the Fed, and he doesn't want to talk about the fact that he's the front runner, but he did give us a sense of what he's expecting on rates. Watch this. Okay, we're waiting on that soundbite, Mark. But he said, yeah, 2026 is going to be lower interest rates. What do you think?
Well, I agree with that. I think that rates will start to come down into the new year on the long end. And, having somebody that's aligned with the administration's vision of starting to cut rates, I think in general is a good thing. I don't disagree. We need to have rates come down. When you start to see evidence of weakness on the fringes of unemployment and this and that, but the bottom line is you also want to have some independence in the Fed. So I think that Hassett probably can do the job well. The market certainly embraces that. Ever since he gained in popularity, the stock market's been rallying. We've seen yields come down, increases of a cut obviously increasing. Those are all good things for the stock market. So, I'm optimistic.
All right, Mark, great to see you. Have a wonderful Thanksgiving, and we will see you
Maria.
on the
Yeah,
other
you
side
too.
of it. Thank you, Mark Newton.